Hello, in this video, I will review the signals provided by Sunshine AI Signals and how they can be used to trade the ES500 or MES500 future contracts. You can also trade using options or ETFs such as the SPY with the various leveraged ETFs for the S&P 500. For those of you who have not viewed the introductory video, I strongly encourage you to do so. You can find that video on our YouTube channel along with all of our other videos. This will give you a good foundation to see how signals can be used during various weeks and how they're used over time to provide trades with higher probabilities. As you may recall, Sunshine Signals provides three to four signals daily: the main signal, the short-term signal, the weekly signal, and sometimes the monthly signal is provided. Each signal will give a buy, range, or sell. In addition, every morning, it will provide supports, resistances, and a pivot point, which serve as the bull-bear line for the day. Sometimes an EOD sequence will be provided, but not always. And if a signal detects a trending day opportunity, it will be shown here as unilateral. Or if it doesn't, then show as not unilateral. Finally, a reference chart will also be provided, which is one possibility of how the day may go. However, a reference chart should not be used as the exact movement of the day, but rather just a reference to be used with all other information to find trades with higher probabilities. Before we review this week's market opportunities, it is helpful to zoom out and take a look at the larger trend. This is the ES daily chart starting from the beginning of 2024. As we can see, the market has been in a clear uptrend since the beginning of the year. And here we've had a period of consolidation from 5160 to 5300 area, and it fell out of this zone and dropped down to this support area right here before rotating back up and recapture the zone and then moving back up to the zone. And then after some consolidation here and a test of the middle of the zone, it was able to break through the zone in the beginning of June, and then it started this next leg up, which is what we're at. So for the week of June 24th, what we're looking for is to see if the market can break above 55.72, and if it does, it could test the all-time high at 55.88, and if that breaks, for another further upside would be expected. On the downside, we will want to see 55.25 and then 55.15 break. And if that happens, it will open the door for 54.90 and 54.40. For Monday, June 24th, the market on Friday the 21st closed with a range buy signal and a monthly buy. For Monday, the reference chart is suggesting a possible range-bound day with maybe a drop at the end of the day. And we also take note here that in overnight trading, the prices went down. The overnight low was around the 55.20 area. As you recall, that the 55.20-25 area was the first point for it to break if we want to see more downside. But here it held, so that will be a level that we would be observing if prices do come down and test that in regular trading. The signal pre-market was range, a slight downgrade from Friday. And there's no EOD sequence. Trending day is not expected, but the daily trend is still up. The market opened under the pivot point here at 55.36, and then kind of came down, but did not reach the overnight low at 55.20. Rather, it hit 55.25 and bounced back up. So this could have been a long opportunity when it didn't reach the overnight lows. So this could have been long opportunity with a stop at below the overnight low. And the market moved up to the first move pretty much a straight line move up to the first resistance at 55.50. and then it kind of went past the 55.50. But it did not hit the second resistance, which was provided about 40 minutes into the market open. And so here, probably you probably didn't catch this top right here, but people that shorted kind of near this 55.50 zone, if they had held, this trade initially would have given about 10 points here, and then but I think for kind of a safer trade, if you will, probably would have been this retest here at 55.50, because it did not overtake the previous high here. So you could have went short here, and then your first target would have been around this 35 to 40 area. And then since we saw the break through the pivot point, pretty kind of a pretty strong move to break that. So you could have held some of your position for the 55, for kind of this 55.25, which was kind of the open low area. And for some, and some may have held a runner, or maybe they may have reshorted or started short when they saw that it couldn't recapture the pivot point here. But this is already pretty late in the day, so be careful here. If you're gonna initiate trade here, make sure it's small and you have the proper stop loss in place. If you did, then the target would have been at this support level, which we did hit at the end of the day. But again, I would say, even though this trade would have worked out, I would still say that with this late in the day, it's hard to say whether the price will just rotate back up or it will continue down. So if you have a runner, you can hold it, with a stop at break even, or if you're not or if you exited here, then maybe just kind of call it a day. For Tuesday the 25th, the reference chart is showing kind of another chop day, kind of back and forth. Pre-market, again, the levels that we wanted to pre-market, we had a low at this 55.18 area. So again, this 55.18, 20, this area we want to watch has, I'm sorry, the pre-market low is actually at 55.12. But still holding that 55.10. So both 55.18 and 55.12 will be areas we want to watch if prices come down. Pre-market, the signal showed a range, and with no EOD sequence, trending days not expected, and we're still having a daily uptrend here. The market opened below the pivot point, and it came down, and it did not hit the overnight low. So what some people might have tried to take a long here at the 55.20 area, which would have given about 10 points or so. But when it couldn't recapture the pivot point, with an uptrend, you would, if there were buyers in an uptrend, you would expect for this to recapture that, this area. But when it couldn't, this could have been a short opportunity targeting the 55.20 area, which it did here. And then it went down, and then it still couldn't reach the low day. So this would have been another long opportunity and a better one, because it was closer to the, and you have closer to the low day, you can have like a stop at slightly below 55.10. So it's a pretty good risk reward here. And he moved back with the target back up to the 55.30 zone, which happened here. For Wednesday, the 26th, the reference chart is showing possible consolidation with a drop towards the end of the day. The signal showed range again, no EOD sequence, daily trend still up, and trending days not detected. Prices opened below the pivot point, but it was still near this 55.20 support. And, you know, and it kind of bounced up. And then it came down to retest it and couldn't break it. And again, 55.18, 55.10 are the two levels that we're looking at. So this would have been a long opportunity with a target back up to 55.35, which happened. And then it consolidated here more for a couple hours, and then at the but it still couldn't break down to even close to our low here. So at the end of the day, the market moved up and hit our resistance at 55.47, and then had a sharp drop back down. So this choppy day activity here, both still presented, but the signal still gave us some opportunities. And here, it's also kind of example why one should not refer to the reference chart has the exact movement of the day. You know, however, what this does show here is that there's to expect choppiness in the market. So don't hold your trades for too long. You know, have your targets and exit when you hit the targets. And also we also know that as long as 55.10 holds, the expectation for the prices to go back up. I mean, we are in a daily uptrend, so that's exactly what the prices did. So it hit the support levels and it moved back up. So what we're looking for if there's going to be further downside, we want to see 55.10 breaks, and as long as that area holds, expectations going to move back up to this 30 to 40 area, which has served as our pivot point for the last couple of days. And if we get over that, then will be a move up to the 55.50 area. For Thursday, June 27th, the reference chart is showing kind of an update here. Pre-market signals range again. So even though the reference chart is showing an update, and trending day is detected here. So the market is showing a possible trending day, but we still have a triple range. So you want to look for confirmation of a trending day, which is that you want to see resistance break and keep moving up. Otherwise, we're still going to stay with our previous range of 55.10 to 55.50. And maybe a little bit higher to 55.58. So, but for movement, for further movement on either side, you want to see these two levels break. Market opened above the pivot point and moved up towards the next resistance. Didn't quite hit it, but it did try. So here, when you see that on this second try, it couldn't really get above, this could have been a short opportunity. It was a stop above. It doesn't mean the market won't move up, but that's why you have your stop, so that so you have a relatively tight stop. So if it does move up, you have the stop loss in place. And then the market moved back down to 55.35. And when we saw that, when it couldn't really break under this pivot point, this could have been a long opportunity. But again, so you don't want to hold your trades for too long. So here probably would have just given 10 points, but if you'd taken it, you would have gotten that. And this here, I mean, looked like it's trying to break. So some people might have taken a short when it broke under kind of the low of the day here. But it couldn't really break down any lower than that. So when you saw that and you saw that the market couldn't really break down, you probably best to exit. Or when you saw it break back over the pivot point here, then you should probably exit, even if it is for a loss. But for others, they saw this as more of a long opportunity because as long as the prices stays above 55.10, the expectations for dips to be bought. So this would have been a dip. So unless the market shows us that it's going to break down, this could have been a long opportunity with with a relatively tight stop in case it does break down, and then it would have rotated back up to 55.50 again. For the 28th, again, the reference chart is showing a possible chop day. And with these, what you want to try to do is make sure you try to use short at the resistances and buy supports and avoid the middle. And here, so the market opened above the pivot point, and we had a very robust move up towards past the first resistance at 74, and then to the next, and even over the next resistance at 80. But it didn't quite hit the all-time high at 88. I mean, tried multiple times and couldn't hit it. So for those that are looking to short, here there is an upgrading signal. So the bias here would be to buy dips, but since they couldn't get above 55.88, you could have tried to short around here with a stop above that, because that's it seems like a reasonable risk reward. And here, and then you would have gotten, with an aim back down to 55.50 area, so you would have gotten that move. And then here, when the prices couldn't really break back above the pivot point with gusto, then here that's a sign not to try to go long. And if you have run or shorts, you could hold them, and if you did, you would have saw the prices move back down. But the 55.10 still held. I think the low day was at 55.10.50 or something. So here, and this one, although we can see the chart that a short at this high right here would have been the best trade. Friday was actually not a easy trading day, because the strong move up here, the bias would have been to buy the dips, especially with the signal upgrading here. And the kind of logical places to try along would have been this 55.60 area, or around here at the pivot point 55.46 area. And if you had, you obviously would have been stopped out, unless you decide to exit, or you kind of you set your stop loss pretty early on to break even on these dips. But most likely you probably would have been stopped out. Maybe this one you could have gotten out at break even. And then another thing, when the prices came down and couldn't recapture this pivot point, that's a sign not to try long. I mean, unless you see it recapture it with a strong move, and then maybe on a retest you can try it again. But when you see this and it was pretty weak, and it looks like buyers are being pretty weak, that's when you think, okay, well, that's when it's a sign that you shouldn't be trying to go long here. But when prices came down, for those looking to go long, when prices came down and still held that 55.10 support, that would be the area to have gone to try a long, because then you can have a fairly tight stop, and then there you could have gotten about 15-20 points here on this late run. Zooming out again, we see that this week mostly consolidated for the last couple of days after this break above this zone. So for next week, the prices need to break above the previous all-time high at 55.88 for further upside towards 55.95, 56.05, and 56.15. On the downside, we want to see prices break under 55.10. And if we do, we could see a test of the 54.90 area. And if that area breaks, we could see a gap fill to the 54.40 area. So I hope everyone had a great week and that you have a great weekend. And if you have any questions or are interested in joining Sunshine Signals, you can contact us at this email.